Terrific. Thanks very much for the introduction. It's always good when someone else does your introduction because, as an ex-girlfriend once said, no self-praise is no recommendation. So, look, I really appreciate everyone being available tonight, and to those of you not listening live but picking this up later, again, thanks for your interest, and I really hope what you see today and hear today will be beneficial to either you, people you know, or colleagues and stakeholders that you're working with. So the focus primarily tonight is on disaster recovery and what's available. We've had an introduction. You know, I understand that authenticity is very important now, so that really is a photo of me. As tempting as it was to put Chris Hemsworth or Pierce Brosnan or some attractive rooster in. In terms of QRIDA, just a brief overview. We're a statutory authority. We were known as QRIDA for those of you that may have dealt with us in a past life. And our main role is to administer programs on behalf of the Australian and Queensland governments. And our key role is to increase the sustainability and profitability of rural of course, when there's a natural disaster, to assist in restoring. We provide a personalised customer service across the state, and we're always happy to meet people on farm, although I would acknowledge that in the early days of disaster recovery, we try and focus our attention on working with our recovery partners like the Department of Communities, Uniting Care, Royal Flying Doctor Service, and those people that are working out of community recovery hubs, which in some areas are still going and in others have been closed off, or transitioned, I should say, to outreach and resource information centres. We've got 10 regional area managers located throughout Queensland, and I think directly 3 of them are operating within the disaster areas. So that is the disaster declared areas cover 3 of our offices. But having said that, we've also got other team members from around the state operating in those declared areas at the moment. So, for example, Tony Kosh from Roma is currently operating in Townsville in the Small Business Recovery Hub for the next week and a half. And John Mattelli, our regional area manager for Capricornia, based in Rockhampton, is actually going to be in, should be in Hughenden tonight as we speak, and he'll be operating out of Hughenden the next couple of days, and then Richmond for about 5 days after that. I guess when people ask me what QRIDA does, every day of the week we lend money to farmers, and of course our core product is the First Start loans and sustainability loans. I'm not going to go into detail about those tonight. That's for another day. But we also have our farm management grants, which assist with rebating producers and their families for getting advice on succession. We now oversee the farm business debt mediation, and we've also got the Office of the Farm Business Analysis, which is something that some producers may actually be able to tap into as they move into a longer-term recovery mode, depending on the impact of the event. But we also do disaster recovery, and that's what we're here talking about tonight. So it's important that all the stuff I'm talking about tonight, all the programs that I talk about tonight, are related to the North and Far North Queensland monsoon trough. So that is the name of the activated disaster. The period of that time frame was the 25th of January to the 14th of February, and so that is what this particular event is known as. And what I'm talking about tonight relates to that event. It doesn't relate to events that have occurred prior. That doesn't mean to say that we don't have still assistance for some previous events, but this is the main game today. So by way of introduction, we've got, for the first time ever, as it happens, we've got significant, so we've had grants before, but now we've got grants of $75,000 to assist primary producers. So the first part of this presentation is related directly to primary producer assistance. There are grants available for small business and not-for-profits in some areas, but I'm not speaking to those tonight. I will speak about small business loans at the end of the presentation. So there are grants of $75,000 and they've been activated to assist primary producers recover from the impacts of this monsoonal trough. One thing that's been made really clear from both the Commonwealth and the Queensland governments is that they want these funds to move very quickly. They want the funds into the community. They want producers to be able to recover as quickly as possible and to ensure that the services that are provided to primary producers are getting paid and benefiting from that recovery effort as well. The grants, unlike grants over the last decade or so, the grants will be paid up front with no requirement to be reimbursed for expenditure undertaken. So what that means is, and we'll talk about the application form a little bit later on, but in effect, the $75,000, if that is what the producer determines he requires, will be paid up front directly into the bank account. We're not auditing expenditure. We're not requiring receipts and invoices in order to obtain those funds. The application is very much about you tell us where you are, what the impact is, what you believe the damage is, it will cost to repair, and we will process the grants from that point. They are grants, and so therefore they're not repayable. So they are, just to make that clear, these are grants, so they are non-repayable. And a colleague asked me about that today, but I've actually had questions about whether they've got to be paid back. They don't. They are a grant. Another question that normally gets asked about grants is whether they're taxable. Are they income? At this stage, there's not been any tax ruling, as I understand it, for this event to say that these grants are non-taxable income. So at the end of the financial year, if you've received one of these grants, they need to be included as income. The other thing that the grants are predicated on is that they are to assist enterprises that have suffered direct damage from the event. So none of this assistance is designed to compensate for loss of income. Our grants don't, or loans do not do that. These are to assist primary producers whose enterprise has had direct damage from the event. The local government areas that are activated for the primary producer grants, and I acknowledge that map covers a lot of other territories, and that is the QRA map. So there's a range of assistance that's been activated for a number of northern communities from this monsoonal trough. But in terms of the primary producer grants, under the disaster assistance recovery, Burdekin, Burke, Carpentaria, Cloncurry, Douglas, Flinders, Hinchinbrook, McKinlay, Richmond, Townsville, and Winton. So they're the local government areas that have been activated. That doesn't mean that there won't be others activated, and that's not our call. The activation occurs for primary producers occurs from the Department of Agriculture gathering information and working with the Queensland Reconstruction Authority to determine whether the thresholds that the federal government has set for this sort of assistance are met. Of course, from time to time, more information comes to hand that may mean that other areas may get activated. There are some areas that are activated for loans and not grants. Again, I think one of my most common messages to everyone tonight is don't self-assess. And so if you're unsure whether an area is activated, if you're unsure whether you're eligible for assistance, I urge you to make contact with QRIDA. Okay, so what can the funds be used for? Because this is a little bit different to to previous grants as well. We've seen, if you like, a broadening of the purpose of the grants. And I note that there are some people from the coast. I think we've got someone from Bowen Gumlu online, and a couple of people from cane growers. So this will these grants are different in their scope to what you would have experienced after Cyclone Debbie as well. So the funds can be used for the welfare of livestock. So that is, if people have to pay for the fodder drops that they may have undertaken in the Northwest, if they've brought additional fodder in to keep cattle going whilst green tick grows and becomes more palatable, then anything for the welfare of the livestock is covered. So whether it's chopper fees, whether it's fodder, whether it's we know in some areas that the chopper pilots were actually going and euthanizing cattle on behalf of the producers. Any of those fees are covered by the grant. The removal and or burial of dead livestock is also covered. There's no doubt that I suppose one of the broader areas for most of the areas that have been activated for assistance is the repairs to infrastructure, plant and machinery, and repairing or replacing fencing. So all of that is covered by the grant. We understand in the Northwest there's a number of areas where cap bores are now uncapped. So if that's a priority for a producer to cap that bore again, they may wish to use the grant for that. If it's headlands for cane growers that need to be repaired, then of course the grants are available for that as well. One of the new areas that this grant has been is eligible or can be used for is for replacing livestock that's been lost. So it's never been able to be used for restocking previously, but it is in this case. And it's, in terms of most of the grazing enterprises that we've dealt with so far, the replacing or restocking is probably not the number one priority because of the amount of infrastructure damage. But when we get into some of the eligibility of this grant, it will become obvious that there'll be people that, because they adjust or lease country, they may not be paying the costs of repairs, but their only loss will be livestock, and they can use the grant for restocking. The funds can also be used for hiring or leasing equipment to clean up for the reinstatement of the landscape or infrastructure. We often get a question about whether it can be used for funding new equipment rather than leasing equipment. Our general feeling is that we would still pay a grant to the equivalent of what it would cost to hire equipment rather than buy, acknowledging that, again, it's capped at $75,000 and the money is paid to you up front. The other area that it can be used for, which has been broadened a little bit, is in effect replanting. So replacing lost or damaged plants, and that can include the replanting of crops to immediately resume the business operations. So in the Burdekin, for example, we know there's a number of vegetable and melon growers that lost crops. If they need to, or if they wish to replace those crops immediately, whether it's with the same crops or whether it's with a winter-grown variety, the funds can be used for seed and fertiliser for that. If cane growers have lost complete areas of crop, and they generally and they want to put it back in the ground now as opposed to in 6 or 8 months' time, then the funds can be used for that as well. What's ineligible? And these are pretty standard for our grants. So paying regular wages to staff for their normal hours of work, it doesn't cover that. It can be used to pay for overtime or additional days that staff have worked to help with the cleanup. You can't use these funds to claim for the use of your own machinery or your labour. You can't use the grants to pay yourself. And they're not. And again, if you're undertaking work for a neighbour, and the neighbour then reciprocates and undertakes the same work for you, and you just exchange invoices, no, not acceptable under these grants. And of course, I've already said they don't cover loss of income or covering of the loss of trade. So in determining eligibility, and every event it comes up, there's always some grey, and sometimes grey in guidelines can be a friend, but I'll do my very best to try and give you the clearest indication of what the eligibility criteria and where people stand. So applicants must be a primary producer. They must have an ABN. The definition of a primary producer is that you spend the majority of your time and earn the majority of your income from primary production. So, for example, in some areas of the Northwest, we've had people with school children that own cattle. They don't have an ABN. They may have, a number of head, but they are not primary producers. They're not filing tax returns. They don't have an ABN. They're not eligible. There will be some cases where someone might be building up to full-time viable primary production, and in those instances we encourage people to make application and to explain to us what their current production is of the property, what the productive capacity of the property is, and the steps that they're taking to become full-time viable primary producers. It's acknowledged that there's been a drought there is still a drought in a fair wedge of the state, and so it is conceivable that someone's gone off farm to work because of reduced income from primary production because of the drought. Of course, we'd take that into account. We also know in a number of, in cane areas, there's a number of, older cane farmers. They may have already reduced their production to 3,000 tonne per annum, but they're still spending the majority of their time in primary production. So it's just a case of them explaining where they spend their time and where they earn the majority of their income. So one of the really interesting areas that has certainly probably become more of a topic because of the flooding in the Northwest, but I acknowledge it's still applicable in the coastal areas as well. And so we've expanded our definition a little bit in this, is it is conceivable that producers will claim grants for multiple properties. Now, so that could be that the trading entity is claiming for multiple properties that they own, so the same ABN, same trading entity, claiming for damage to multiple properties. The way that we're going to determine whether those properties are eligible or not, the things that we'll take into account is the commercial viability and the scale of each of those properties. So, for example, in the Northwest, we know that there's producers that have properties that are breeding enterprises. They're running, thousands of cows, and then they've got finishing blocks. Some within, 50 kilometres, some further away than that, and those finishing blocks have the ability to carry anything from 800 up to 3,000 head of finishing or trade cattle. Well, so the scale of an operation, if you're able to carry 2,000 trade cattle, that's a livable unit. That's got scale. So the areas that we're looking at is, you want to show that the operation has scale and that it could be standalone viable. If the properties are all on one rates notice and they're all adjacent, then that may well be treated as one property, not multiple properties. What I would urge people to do is, with their applications, for each property they're claiming, which would have a separate rates notice, they should make separate application. Okay, so separate application for each property for each rates notice. We're not using PICs as a determinant. We're not using multiple ABNs as a determinant. We're using the basically what the producer is declaring to us and the rates notice as the determinant of the property detail. Other things that we might take into account is, particularly in the grazing areas, if you've got 5,000 cows and they all live on that one property, and then you've got another property and another 3,000 or 4,000 live on that property, and they're run separately, then we'd see that as two properties. But if you own two properties and you own 5,000 cows and you swap those cows between the two properties over the course of a year, then we'd probably treat that as one. If there's different staffing, so we know there's a number of operations where sons or daughters run one place, mum and dad run another, or there's managers on a place, that helps us. Again, certainly build a case, provide us with as much information as you can, because we acknowledge the scale of the impact for a number of producers from this event. Another area of eligibility to be looking at is agistment cattle. So we acknowledge that because of the drought, there's a number of producers that have cattle in this area on agistment. They may not even be domiciled in the declared areas, but their cattle are. Those producers are eligible to claim money from the grant. So if you've got stock, I know I met people that had livestock that they lost on agistment in Richmond Shire. They lived out of the area. They are eligible to claim for the grant. So that's an important one, because some properties actually had, 2 or 3 lots of agistment cattle on those properties. I should also make the point that the closing date for these grants is the 9th of August. So that's for the grants, not loans, but the grants close on the 9th of August. I guess one of the great things is that this is an upfront payment. So it's not that producers have to wait to spend the money to get reimbursed. So making application sooner rather than later makes good sense, because it's a much easier document to deal with. And that brings us to that application process. So how best to present your information. So I actually lied on state radio the other day on the Country Hour. I was interviewed and I said the application was 6 pages long. It's actually not, it's 4 pages. It's only 4 pages, and that includes the guidelines. So there's not a lot to fill out. We've made it as simple as we can to get the money flowing. What I've been saying to people consistently is that photos paint 1,000 words, or pictures paint 1,000 words. So 5 or so good photos showing the impact of the event to your enterprise should accompany the application. If you don't have photos, okay, then send us maybe quotes for the work that has to be undertaken, or if you've already received an invoice for work that a contractor or a musterer has done, then supply those. But 5 or so good photos. We don't need 50. 5 or 6 would be great. As I said before, we need a rates notice. If you're not the property owner and you're leasing it, or you're agisting cattle, then we require a copy of the lease or the agistment agreement. Now, if a lease or an agistment agreement don't exist, it's all done on a handshake, then we require a statutory declaration signed by both parties, identifying who is responsible for which costs. Now, some of the coastal industry stakeholders that are on the line, they would have dealt with these before, because sometimes, cane land that's leased, there's not always a lease agreement. So we worked with the cane growers in Debbie, for example, to ensure that that stat dec process was in place. So if you don't have a copy of a lease or agistment agreement, then a stat dec signed by both parties identifying who's responsible for what costs. So we expect that there'll be landholders that didn't have cattle on their property that were taking agistment cattle on board. We deem that agistment income is primary production income. So we're acknowledging that landowner, if that's where they spend the majority of their time and the majority of their income, well, they're a primary producer. And then the people agisting the cattle, if they spend the majority of their time in primary production and earn the majority of their income, then they're also eligible, but for different costs. So what we've got now is the two tricky, and they're not tricky at all, the two areas that you've got to do the most work on the application, because the rest of the application is ticking some boxes, telling us your trading entity, telling us your name, your ABN, the bank account that you'd like the money placed into, and then these questions. First one, section 4, and that's where we want you to describe your operation. Tell us how big it is, the scale of the operation, how many head it runs, how many tons of cane it produces, what vegetables you grow, what's the productive capacity of that property. So, for example, we know that some areas have been in drought, so they may not have been fully stocked, but it'd be great to know that on a year-in, year-out basis, what do you consider the carrying capacity of your property is. Give us an idea of the markets that you service. So if it's cattle, is it live X or is it being finished and sent down south? I guess for cane growers, it's reasonably obvious. We supply, whichever mill, they supply. For vegetable growers, well, just give us a sense of what vegetables are growing over the course of the year, and what sort of tonnages. So it'd be just great to get a snapshot of the overall operation. And then the next bit is, what's the impact of the event? So what's the damage that's occurred? And I know some of the North-West graziers, that it can only be an estimate. I acknowledge that. But some have already been up in the air. Some have already estimated that they know that their boundary fences are gone. They've got a rough take on the cattle lost. They're aware of where washouts are and that sort of stuff. So just tell us what the impact of the event was. You may even want to explain what the longer term, short, medium, longer term impact of the event is to the operation. That then brings us to section 5, and this is really quite simple. We've tried to itemise the activities to make it easier for people, but you just need to provide an estimate of the cost that you consider your business will have to fork out in order to undertake your recovery. So it'll be telling us what it's cost for fodder drops and burial of cattle. You'll be giving us an estimate of how many kilometres of fencing you believe you lost and what that might cost. You'll tell us what restocking of the place for livestock that you've lost may cost, and it's only an estimate. I think, again, this money is up front, and the beauty of getting the money up front is that everyone can manage their own recovery their own way. So you get the money up front. Yes, you might have itemised 5 or 6 activities that all need funding, but you decide in which order that you use that money to undertake those activities. We're not auditing, so we're not asking for receipts and invoices down the track. Although I encourage everyone to hang on to those, and you would anyway, because you're going to need it for your BAS statements or for your account. So what I do is list the cost, the estimated costs in those activities. Tell us what the total is. Don't just, if it's the grant is $75,000. Some enterprises will not get to $75,000 and will pay what they estimate that it comes to. Some will be well beyond $75,000. But if that figure is, and I've spoken to people around Julia Creek where the figure is, it's 6 figures, will tell us that figure, even though we know that the grant can only be for 75. And then what's the bottom line there is, what's the requested grant claim for this application? So if it's 75,000, you state it. If it's, we've had cane growers in one area where once they've identified what they needed to do. I think the figure came in at about $45,000, and that's what they've claimed, and that's what they've been paid. So it is purely an estimate. We acknowledge that some things you're not going to know for months yet. It would be better just to make an estimate than waiting another couple of months to maybe be a little bit more accurate, because ultimately I think everyone has a fair idea of what they're going to have to undertake to get things rolling again. So that's the main stuff about the grant. As I said, it's been made to be as simple as possible. The last page you sign. The forms are available on our website. They are they're writable, so they're typable, but it's not available through the portal presently. So you'll need to type them, save them, email them, or scan them and email them along with your photos and your rates notice. But you know, the applications are rolling in. To date, we've paid out almost $2.2 million. Majority of those are to primary producers, and we've put a lot of additional staff on to assist with the assessments to ensure that the money rolls quite quickly. So you know, don't delay. The quicker that you get these applications in, the quicker that the money will be in your bank. I'll touch briefly, and I'll try and make this quick. I acknowledge the time, and we want some time for questions. I'll touch briefly on the loans that are available. So there are disaster assistance loans. They're available to, the ones I'm talking about now are available to both primary producers and small business. And the first loan, the disaster assistance loan, that is for primary producers and small business whose assets have been significantly damaged as a direct result of the natural disaster. So that is, the enterprise has received damage from the disaster, so physical damage. And the loans can be, they can provide funds for restocking, for repairs, for replanting, day-to-day operating expenditure, and covering cash flow shortfalls. The loans are up to $250,000. One thing that's changed is that these loans used to be over 7 years. They're now over 10 years, so a term of 10 years. And you can ask for up to 2 years interest only with these loans. The interest rate that will be applicable to these loans is 1.37%. There are no fees and charges with any QRIDA loans, and that applies to these as well. So there's no fees and charges. Interest rate's 1.37, and that 10-year term. The other loan that I was going to talk about, and this also relates to one of the questions that was asked prior to our webinar tonight, are the essential working capital loans. So essential working capital loans, they're available to primary producers and small business whose operation have been impacted by the disaster event, but they've not suffered direct damage from the event. So there's a number of businesses who are concerned now because of broad livestock losses in the North-West, for example, that their business will be impacted because their clients will not be trading or operating to the same extent they were prior to the flood. So this loan is for those businesses that, if you like, financially impacted, but not physically damaged. Those loans are up to $100,000, again, over 10 years with up to 2 years interest only. The interest rate here is also 1.37%, and there's no fees and charges. Now, the thing about our loans for these natural disasters, the essential working capital loan and the disaster assistance loan, they are available from now until the end of financial year 2021. So they're available for 2 years from the end of the financial year of the event, when the event occurred. So as long as an applicant can show that the loan is related to the event, or the need for funding is related to the event, then you can still make application. We've actually, even in last month, we still approved, I think, 1 or 2 loans for businesses in the Whitsundays that have been impacted by TC Debbie. So, so the loans don't run out anytime soon. But I think what I should have made clear is the essential working capital loan is there for a cash flow shortfall. So they are loans. They're not low doc like our grant of 4 pages. We do need to understand the assets and liabilities of the business. We do need to understand what the cash flow looks like. So we would be asking for the current cash flow for this financial year and at least next year, projected cash flow for next year. And we would be asking for the last 3 years' financials and tax returns. So they are loans. They do require additional assessment. They do require a bit more paperwork. But again, as I've said all along, don't self-assess. If you've got questions about any of these programs, please call QRIDA and to discuss those loans. I will just mention, I think we've already said, we've got recovery, we're operating in recovery hubs or temporary offices this week. Of course, we've got Janessa in our office in Cloncurry. Sam Spina is undertaking a temporary office in Mossman on the 1st of March. John Mattelli is there in Tewin and Richmond over the next week and a half. And Tony Kosh is in Townsville over the next week and a half. And what's not on this slide is Bradley Whittington will be in Winton at the Neighbourhood Centre on Wednesday and Thursday this week. And I understand the Rural Financial Counsellors will be in Winton on Wednesday also. So critically, if you're not sure where your local office is, that's not a problem. We've got a free call number. So call us, 1800 623 946. That number is 623 946. All the information I've presented tonight is on our website. And you know, we're happy to work with all of you to make sure that your recovery is as speedy as possible. And thanks so much for your attention tonight.